To the Breakfast Club. My name is Darren Hancock, and this is the ThetaWave Trader. Welcome to the 4th of December, 2025, where the markets are choppy and the risk should be limited. Let's see where we're at this morning. Okay, we're live. So let's just have a look at the hourly or 4-hour. We've come back into this imbalance right here. See this? 4-hour imbalance. Tag that nicely. Had a nice reaction off of that. Took out the highs. Now we're back in the middle of this last 4-hour candle. On a daily chart, we still have some upside objectives here. Still looks bullish overall. So let me just show you the hourly here. This is what I liked last night. Was this hourly SIBI. We took some lows, traded above it, and then traded above this candle here. Remember the candles to the left? Look at the candle to the left. Look for the bullish candle to the left. If we trade above it on a close, look for its 3 levels, and it pretty much is buried inside the SIBI. So even the mean threshold of that candle ends up being the top of the SIBI. You have to allow for the SIBI to close, and it does right here perfectly, somewhere around 3 o'clock in the morning. And then we take out the highs, and now we're expected to see a nice little tag of this order block and then continue going higher. But the mean threshold has been hit. We've wicked through it a couple of times, but the mean threshold of this candle is holding. So all that being equal, I would like to see that continue to hold and then start to march higher. So look for the lower time frames to confirm that that narrative is continuing. And if not, if it rolls over and takes this low here and we close below 606, then I'm looking for a run on this rejection block and old lows, because we've taken out the old highs here. Now, if they're pairing that up with folks below the market, then I'd expect to see them run through there if we take out that 606 level. So that's what I'm looking for there. Good morning, Hadi. Good to see you. And 5 other people that are in here that I haven't said anything. Good morning, everybody. So we'll see how this hourly. Good morning, Hans. We'll see how that hourly candle, that SIBI there holds out. So far, it's not acting the way we want it to. I wanted to see it come back down, just tag the top of the candle, or this candle, mean threshold, is the line in the sand. So it's swung all the way through. The fact that we've got a wick here puts me at mean threshold of this candle. As soon as we get below that, this candle gets activated. For me, it's not really active right now. So until we break below it. So you see how we're eating through that mean threshold yet again. So looking for a run on the lows here and then potentially a run lower this morning. We'll see if we get a break below here. So what you want to see is a break below here, create a fair value gap, institutional order flow entry drill for continuation on the downside to take out these lows, if that's what's going to manifest. That's on the hourly, so we'll start looking on a 15-minute chart and a 5-minute chart for that that kind of setup to happen. Peter, good morning. I have appointments today, so I'll be on and off, but trying to learn. No worries, Peter. You take as much time as you need, man. I haven't gone to bed yet. Well, I've tried to go to bed, but I haven't had any sleep at all. I have not been able to change over yet, so I've been up most of the night. And yeah, so we'll see how this show goes this morning. I haven't got a lot of energy this morning. 5-minute chart. We'll see if this level holds. Let's look at ES. ES has come down and just tagged the top of the fair value gap here. This inversion now. We've tagged it, taken out some lows, got a SIBI. We've traded through the SIBI, back into the SIBI, and you want to see a continuation. That failed, and then we close back through that level again, right there. You come back, you tag it right there, finally take out the high. Change in direction. We've traded through it and through it again. So sloppy price action for me. Not interested in participating in something that choppy. But we'll stay on it today. We'll kind of read the price action and see if we can see an entry that's relatively clean. Good morning, Melody. Yeah, this is why I'm here that early. I'm usually this early when I actually have the regular show, but this morning I have not. We actually my wife and I got up at 4 o'clock in the morning and watched Home Alone. We started watching our Christmas shows now. What's your favorite Christmas shows, you guys? A Christmas Story, the Red Ryder BB gun. I love that one. Anyway, let's go over to oil, have a look at oil. Choppy, sloppy. Got nothing for you in oil. If we can get above 59.48 on the close, wait for the highs to get taken and use them as support to continue to push higher. We're still inside this range here right now. I got nothing for oil though. It's not clean. Bitcoin's not clean. Remember yesterday we put our line right here. We traded through it, took the highs out, went all the way up to the premium box, that little tiny guy right there. We hit that, rejected off of the lower one. So we went from box to box, traded through it, came back inside the box, and then you're expecting to see range extension. But you always pay yourself at rejection block. Always, always, always. Because in this particular case, you saw how the rejection block got hit several times. We tagged the next downside discount objective, hit it, and then we look for a break above here, and then you're looking for a break above that candle there. So you break above it, you come back inside it, bodies respect that. You get another little SIBI, trades above it, comes back inside it, continues to go higher, takes out the highs, aiming for this little guy here. They hit it again, came back, we tagged this level. So that first candle to the left. It's this guy, but he's buried inside the larger one, so you have to take the larger one. We come back to the inside of it, tag it, take the high, pay yourself at the high. Takes the low, trades all the way back to the bottom of this SIBI, trades through this one again, comes back inside, finally trades through into the rejection block, does not take the high again, another change in direction, trade through it, trade back to it, go lower, we wait for it to clear out of here, it does come back into it, then you want to see this continue going lower. You do not want to see it break through the high of this SIBI here. So draw it across, and you'll see that the bodies respect that right there. You don't get wicks above it, or you get wicks above, but you don't get the body above it. So that holds, rolls over, takes the low, and finally get that range extension we were looking for a while ago. So looking for this little guy down here now. And then eventually I'll run on these lows, and we're retargeting the next SIBIs or discount arrays in the larger range. Good morning. Thank you for your provided knowledge of ICT concepts. Glad I found this channel. Oh, I'm glad you found us too. Vital. You're welcome. I'm happy to help out in any way I can. Sorry, there's not much energy this morning. This will probably take me a while to switch over from Asian time. It's like 10 to 7 in the evening where I was at a couple of days ago, so it's taking me a bit to change over. So I apologize for that. Hopefully I'll be a little more energized by next week. But yeah, welcome, Vital. We appreciate you popping in. You found our channel. You can pop in on the Telegram channel. There's people in there willing to help out and continue to guide you in any way you so choose. And nobody's selling you anything. I refuse to see anybody try to sell something or sell somebody else's site, so I'm pretty adamant about that. I believe in if you can make this work for yourself, then pass it on. Teach somebody else that. Don't charge them. I'm not charging you. So don't charge anybody else. Just pass it on. Let's get people moving ahead in life without trying to screw the next guy behind you. Anyway, that's my little rant for the morning. Bitcoin. So looking for Bitcoin to take this first inversion fair value gap from Wednesday, and then tag this and start running lower. So we've got to see how we work through that little first presentation, 15-minute presentation on yesterday. Natural gas, do your thing. I want to see that get up there a little higher. A little disappointed in the Canadian real estate, even though the American one is climbing a little bit. It's nice to see. Gold. Gold came down all the way into this little guy right here. Look at that. Hit it. Look for this next one right here. We come back inside it, run higher, wait for this one to get hit, comes back and tags it, and then literally runs up, takes out this previous high, and then we don't want to see the mean threshold of that get taken, right? So mean threshold gets taken, so we know we're going to go lower. We're back into the mean threshold of this candle, and we're back inside that SIBI again. So it's a small little range that we're in here. See, it's got to break above this candle. Find some support at that to start running higher. So right now, stuck with gold. Nowhere to know for sure. Such a small little consolidated range. So Haven't got anything for gold. No bodies get above this candle yet. So we're back inside this range. Body trades below it. We trade back inside it. Take it lower. Looking for box to box trade. There's your box to box. It's done. Took a while to get there, but it's there. Now you want to see if 1484 in sugar gets taken. If it does, look for this as support to continue to take out these equal lows. Lows have been taken. Right in the middle of the range. Nothing for euro. This is typical Christmas type price action. So be careful how much you guys risk today. Be real careful. Yep, I'm making my way over to silver there. I'll have a look at that in a sec. This is good. Premium's been taken. Yes. I don't see this hold price now. Keep pushing higher. Thanks. The DAX. So yesterday we were talking about DAX. That's the 4 hour. And then we're looking at saying we wanted to see if it got above that little SIBI there. Remember? We're talking about that around 9 o'clock yesterday, 9:30. We're saying if it reaches through here and takes this out, look for this candle to the left. Look for that one to get taken and added and made support, right? So there it's taken, and look at it. It comes back, finds perfect support at it, and then leaves. Takes the high, pay yourself, pay yourself. So that was what we talked about yesterday. It manifested, came to fruition, went higher. So what we were looking for is if it did come back up and retest this, was it going to roll over and come down to these lower ones, right? It didn't. It went through that. So you say, great. Now come back, find support. That candle is the important one. So the next one is this one right here. Once we break that high, you come back, find support at it, and go higher. This one is the same as this one because it's the new high. There's a little swing here and a little swing there. And then when that one gets taken, which has just been taken now, we can come back, find support at that. You want to make sure you look at all of these and the mean thresholds right there. You don't want to see that get broken. If you take the mean threshold from that candle's high to that candle's low, are open to close. Take that whole section. Here, I'll just do it right here. %50 puts you right here on top of this one again. So if this rolls over, comes back down, that's, you don't want to see any lower than that. Ideally, I wouldn't want to see the mean threshold of this candle get taken. But you take all of them together, there's your safety factor for the DAX. And your upside objective. Here's our next bull trap. So we want to see if this bull trap holds. So watch the rejection block. If we can get up on top of this, start targeting our next upside here on the 4 hour. Right there. And if we get through that, then we can target the next ones. But we want to see this bull trap get broken to the upside, find support at that, and then go higher. Silver sideways. We got nothing for you in silver. We've got equal highs. As long as we don't lose this spot right here for silver. As long as we don't lose that on the downside. And market structure shift, you're looking for further upside prices. Yeah, it's nothing to write home about with silver just yet. Yeah, we broke above it here, came back, found support at it, went higher, took the high. Oh no, they're equal highs. Come back down. Now you want to see it push right through the small little area right here. Get up on top of this, find some support, look for those equal highs. That's what you're looking for. Those are the two areas that you kind of you want to see support. So you can look for your range extension model and then the continuation model. It's got to close above here for range extension, and then continuation model occurs after that. That's all sideways. That's holding still. So you want to see this close above here. Yes, took the midnight candle. Oh, you're welcome. It's 9 o'clock. $6.74. So when you see this kind of this thing, we see a bold candle, and it takes out this first candle to the left right here, and then continues to go higher, takes that one out, then continues to go higher. If this candle does not come back and tag this and continues to take out the next one, always look for the next one, not these ones down here. You look for the next one, the latest one. So the box to box, like this one here, this beautiful little box to box trade from here to here. That's where we're looking. That's just about to tag it right now. That's a box to box trade. And you get your trade, take a portion of your trade off there, and another portion off at this high here. Move your stop loss to break even and let it buck. Because don't forget, we have not had this one tested, and we have not had this one tested yet. And this one hasn't either. So if this holds at the mean threshold of this and rolls over, expect these to get tagged. If it runs through it, you want to see it close above 667 and then look for range extension. That's a nice box to box trade. So then we'll look for the highs. Range extension. Right there. On a 5-minute, box to box. Come down to the box. Trade it back up, take out the high. Come to the top of the box here. Now if that rejects off of there on a 5-minute and rolls over, we want to see if this gets closed above. If it doesn't, then we could quite easily roll all the way through this level here again. Good morning, family. Haven't seen you for a bit, Darren. I hope everything's okay. Yeah, we're doing very well. Thank you very much. Doing very well. Thank you for asking. I hope you're well as well. Nice tag of this high here. Keep pushing higher. Remember that range extension model right here. Tag. Now you want to see that push higher now. Let's see it take that high up. And then you'd be aiming for rejection block. Old highs. $25,966.92. Yeah, I agree with you, Hans. I think that's where we're headed. There, it's taking it out. Pay yourself there. If you entered in right where we said we'd expected it to go. So this is just, I want this to, you guys to see this. This is what reiterates what I was saying earlier. If this entry, if you did not get that entry, you wait for price to clear this high and retag the high. If the candle continues to drive through the next one, you wait for the next one to get hit. If it drives through the next one, you wait for the next one to get hit. And if it drives through the next one, then you wait for the next one to get hit. Does it come back and tag that? And it finally comes back and tags here. Or you just say, I'm going to wait for this high to get taken. It does. Now I'm going to use that high for continuation. You're already up in the premium array, so you can also use the premium as well. From here to here. Right there. See how the body trades above it? This is the range extension model. We trade back into the premium. Once the premium has been broken, we find support at the premium array and look for range extension. Here's the range already extended here. We're looking for that to extend further. And now we're looking for a range continuation model. So I'm looking for a fair value gap to form above here. A institutional order flow entry drill and a continuation to the upside. So those are box to box model, internal range liquidity hunt model, range extension model, and then the continuation model. So those are the 4 models you need to either add to your arsenal or get really familiar with. So you're looking for a fair value gap to form above here now. So we're through that 792 level if you haven't paid yourself. So you've had two nice little entries, one here, actually three nice little entries here. And we have a nice range continuation model. It's looking good. Watch for this 4 hour to fill in here now at 726, 723. $723, $724. I think Hadid's got $724. And then $753. I've got $766, $70, and $775. At $729. $760, $763, $787, $791, and $809. Those are my numbers. We're waiting on that 724. So just from this entry, this clean entry right here at 666, you're already up 50 handles. There's 724, 725. Looking for 729, 730, somewhere around there. That's my next level. Good. Well, the next level after that's going to be right there. 760. We'll see if this holds. And we can come back for a retest. It's 729. 75 is holding. So if you look at your 5-minute chart, this is your range extension model and your graded response. We're starting to look for a graded response here on the next 5-minute candle. You're either looking for a continuation straight up, that's A plus. A is to get back down to this for an institutional order flow entry drill for continuation. And then you want to see consequent encroachment of this, which also tags this 692. So ideally you want to see that happen for a little pullback and then a continuation reaching for this my next level, which is 760, 64, 787 and 791 to 810. Those are my next little data points above me. So what trade here? Change in direction. If we're getting our pullback now, that's good. That's what you want to see there. Now I want to see this get utilized. Watch where it closes. He's probably looking at a 15-second chart. That's why he's got in short there. 15-second chart right there. Traded below it. If he's in short there, looking for a run lower, looking for a market structure shift right here. There's your institutional order flow entry drill. So when you see that, now look for a 15-second confirmation that you're changing direction. If not, just wait for that 693. Now we've got an open below. We'll come back into it. I expect to see that short there now. Keep your stop loss tight if you're in that. So where would your stop loss be? I'd have it just above this candle right here. So short. And you're looking for range extension. You're looking for this range here just to break this low here and keep coming lower. Keeping in mind that this mean threshold could be a consequent encroachment. It's all you hit. There you go. Now you broke it. It's good. Pay yourself, move to break even. Now you don't want to see it come back up above there. So you want to see it continue to go lower now. Targeting that next little high at 694. Pay yourself with a fill of this here. See that just filled? Pay yourself. If it reverses on you, goes back through you, you're going to wish you paid yourself. If we don't get the target we're looking for, look at these objectives that are coming back inside this range. Is it quite feasible that we can just come back, fill that, turn around, start marching higher? If we close above this candle here, which we did, now that's a change in direction. If this candle here gets closed above, now we're going higher. That was it. That's the small little retracement you get. That's the institutional order flow entry drill, and the continuation. You want to see it right there. Go higher. Now, if it breaks through this candle's 699, we're continuing to head back to this, looking for another little poke down in here. If not, that's the retest right there of that. So I'm going to put a long right there, and the stop loss is so tight right there. I don't want to see it go below that. If it does, then that's fine. We'll just get back in sync with the market. This bull trap, you want to see this bull trap give way. So if that starts to trade through there, right there is the stop. It's got to stop right there. Now my stop loss is going to go right to that. I don't want to see that get broken again. So I want to see that continue marching higher and take this candle out here now. That's a lot of waffling. Yeah, that's gonna get, that'll take me out now. That comes back up, I'll close that out. I'm going to close that out there. Not acting the way I want it to act, so we'll wait. I'm going to wait for this to break here now. It's kind of hoping we come back into that, tag it, and then just continue to go higher. This pullback here, not interested in it. So wait for that to clear that level there. See how it's just coiling up here? It's going to bust down or it's going to bust up. That's the level we want to see hold. It's got to keep coming higher. Now that's consolidated, a small little consolidation. So break above this support, first candle to the left, right there. Break above it, and then we're targeting for this area up here. If this pops below, we're still back to looking for this down here. Yeah, I'd like to see it come lower. I agree. I just thought if that's an institutional order flow entry drill and that's the reverse, then you got to take it as an opportunity. But then it starts to trade back in, not interested, not acting the way you want it to act. So we can still see continuation down here. So watch for that 692. There it is right there. Now you just wait for an opportunity to see your 15-second change in direction. Now that we've hit that level and we've hit the consequent encroachment of this, which was one of the targets we were looking for, now you wait for this market structure shift. You keep calling for 684. What are you looking for here? $684. What's 684, Hadi? I don't know what 684 is. It's right there. It's on the top of this candle. I get what you're looking for. You're looking on a 15-minute chart, hey? Fair enough. Now, this is that another level that's been hit. We've traded above that level. You want to come back into this level, and now you want to see it go higher. Now, again, here's the bull trap. This is where you could get trapped in here. You want to see this break the high. So I'm going in again long there, and if it closes again below me, which it looks like it's going to do, so I'm going to get out. I'll wait for that candle to finish. Yeah, there's the reverse back into it. I'm out. So bull trap caught me there, right? So we see how we traded just above it. You trade back into it, and you want to see that continue going higher after hitting a key level. And if you're on the wrong side, don't wait. Oh, you just paid some new information. That's all. And we got to wait for that market structure shift now. So now I'm not gonna catch these ones. I'm gonna wait for a market structure shift, which would be a lot more stable trade. It's a good example of a bull trap catching you here and a bull trap catching you here. See with this one? Bull trap caught you, rolled you back over. Bull trap caught you, rolled you back over. So wait for these bull traps to get taken to the upside to get a little bit more of a, yeah, that's my directional change. See how we broke market structure down here with the body? And then you trade back into that candle, roll over, go lower. As soon as we break this low right here, come back into it right there, go lower. So now you're looking for a long, you're looking for any opportunity now that we get back to this 684 level that Hadi's looking for. And then the line in the sand is the mean threshold of that candle. 666, 665. So it's a run all the way back down into here. Take your fib tool. We've hit 62% on the money. Now we're breaking through that level. So we were close. There. Now you can go along. Stop loss will sit down here. Catch another long there. risk-free. Tag that one now. It could still come back and get me. Staying just below these little cluster right here. Well, it came to 62% of this little range right here, right? Now, see, I don't want to see this kind of stuff. I want to see it just start exploding to the upside now. Oh, that just come back and just grab me. See that? Why that's still holding on, I have no idea. That's what you got to be careful of. So quickly, risk-free. I don't know why you saw that ripping all the way through there and not taking closing my trade out, but it ain't done yet, Hadi. Look at that. It's hit it now. Watch for this 665 here. This could be a big power run through all of this now. $9.30 open. We hit that level we're looking for, the mean threshold of that candle, right inside here. Let's see if we get through that first presentation and start pushing higher again. Wait for something clean to set up now. We've got the 930. Watch down here now. 634 to 623. Look at that change in direction right there. See that? Came right back up and just nailed it perfectly and then quickly ripped away. That's precision, but that happened too quick for me to see it. Break the low, retest the low, go lower. This is the bull trap you want to see get taken. This could be a monster run down today. Running for these equal lows down here now. Taking out the equal lows now. Watch for this hourly run now. I can see this running for these hourly lows here. Way down here. That's been broken now. I want to see one little retest right to here. 605. Just bring it back into there. If not, she's going to run on us. I want to see 605 get retested. I'll take that short there. I'm looking for these lows to get taken now. That trades through there, that's a big hit. Now we've got a change here. Where the hell did my trade go? Where did my trade go? I see this hold right here. I don't know where my trade went. I don't think I hit the my stop loss was up here. I don't know why that just bailed on me. But anyway, you saw where I wanted to go, so I still want to go for the lows here. I don't see this hold price. Let's see if it keeps coming lower now. I don't know why that closed out my trade. See, we've traded above this little civvy. So here's your reversal. I guess you have to take all of this from here to here. Here's the first one, traded through it. We're back inside it. Now you want to see that blow through this level right here. Find some support at that, and then take this high. Get some support and keep pushing higher. If you want to go higher, want to go lower, you want to see it pop through here. Find support at this and keep coming lower. And inside that range, you're already up around 60, or optimum trade entry reversal, 70%. Hey, Pablo. Good to see you. Haven't seen you for a while. Hope you're well. We've traded above it. I'll look for a retest of this down here. Keep pushing higher. That right on that mean threshold. Candle to the left, right there. Body traded, did not trade above it. It did not trade above it yet. So look for a retest of this area right here and here. Institutional order flow entry drill. Finally got above it here. Wait for see if this bull trap holds or if it breaks to the upside. Ah, you're back, are you? It's been a while, hey? Well, be careful. It's a really choppy market right now. Probably not the best time of year to be doing any trading. Bull trap. Just hit right on the very bottom of it right here. We've blown through it right here on a close. We've retapped it. So that's why all this chop, when you want to see clean price action, you want to see it tap and go. Wait for a structure shift here and wait for it to break through here. I'm going to pull this down to here because that looks like a little imbalance down there as well. Right there. Let me stretch that out a bit. Yeah, you can see it right there. So don't mess with this until it breaks below here. My stop loss would still be intact. I don't know why it closed out there. See it close below here. There's no close there yet. See how it literally stops right on it? Watch it close below. Come back and use this mitigation bar, or I guess it would be a breaker. There's a swing here that takes this out. Look for these two candles to find support and then roll over and go lower once you get a body that trades below here. And this is the little structure you want to see broken to the downside for the continuation model, or the extension model, then the continuation. So the midnight candle you're saying is right in here at 640. It held price back. The low has been taken, change in direction. No bodies broken through here yet. So you're still inside this range here, and you're just getting chopped up now. So just wait. See that go higher back into this, so box to box inside this range. We want to see it revisit up here. Now it's below that level. Watch for a retest of this and then roll over and come lower. And you see how it's not acting the way we want it to act? That traded through it. It traded through the upside, traded through the downside. So now you got to wait for a range extension. Otherwise, you're just going to keep getting beat up inside this going higher, get support to go to the premium. If it breaks through here, get support to go to the lows. You see how that whole setup fails inside these crazy little whipsaw shitty price action. And if that happens, then you got to be bold enough to say it's not trading the way I want it to trade, and that it's not a typical trade day, just so you know. It's not the system that fails. It's when you got sloppy price action like this, it beats up most people's, if not anyone's, trade model. So we're through this, back inside that level, going lower. Now you want to see it go lower, like tap this level like that and then go. So why it's pulling back into here, it's got to come lower. And if it runs back through here again, now you can see why consolidations, you can get beat up in consolidations. But if you're just trying to stay on the horse right now, we're bearish. Inside this little guy right here. There's the mean threshold of that candle at 566, which is where that just landed flat on there, right there. The bodies respect that mean threshold. Now you want to see it drive straight through here, and I want to see it reach for the lows, for the rejection block. That's my next target at 495-ish, 493. Then you split this wick into quarters. And you can see why it's frustrating when I had my trade on there. Stop loss was sitting up here, and we'd be in profit now. But whatever. Still looking for these lows. See how that level finally found some support perfectly, albeit higher, lower. Froze right on it, froze, tagged, took out the low, range extension, right? So if you're here and you want to pay yourself as soon as it gets that low, pay yourself there, because now it's coming back to take your stop loss. Change in direction. Watch for the candle to the left of it. And there's no swing point here. Look for this big fella here, buried inside these three. So wait for it to get up on top of that level. And these three candles. And you're retargeting this guy up here again. There's the retest. Now if it eats through it, you want to see it close below it, come back into this, and then another range extension. If it just comes back, tags this and goes higher, that's what we're looking for now, is for it to break this high here. This is the macro time. Well, this is on a 15-second chart. Let's get back to a 1-minute chart here. Oosh, that's shit. We'll stick with a 15-second chart. That way you can see it acting a little quicker for you. So there's your entry there for a long, and you're looking for a rejection block. You pay yourself there. Get up on top of here, and now look for a run to this level here. But we got to get a body above here, though. Morning, Russell. So you have to ask yourself, is this acting the way you want it to act? If it's not, if it's choppy, don't put money at risk. Even demo dollars. If you're just paper trading this, don't. Because all you're doing, you got to think about paper trading isn't about just making or breaking your trade. It's about the psychology behind, if you treat this like a real account and you're risking money inside here, even though you're looking for it to hit a certain level and bounce off of that and stuff, if you're looking for a reward in here, inside this mess, when it's not acting the way you want, if you can't stay out of it, then all you're going to do is reinforce negative behavior in this kind of high stress, high resistance environment. And if it means waiting a week, month, 2 months for your trade setup to happen cleanly, then that's what you got to do. See how we've just traded up into the rejection block? We did not break that high. The body did not break the high. So we're still back inside the range. This one here, now we've traded slightly below it. We've come back up. Now we're above it. We're below it, above it. That's not clean price action. Overall, we still want it to go short, but it's definitely not getting there in a clean kind of way. So if you want to put, there's your low taken now. See that right through it, Next one's right here. Retest that level right there. You're looking for a reversal pattern at 501. See how we're through it again? Down. Choppy, man. So inside this small range here, $62, just shy of that 70%. Let's see it come lower. Keep pushing, keep pushing. Hope you're doing well. I wish one day, because as knowledgeable and experienced reading the market as you, you'll get there, Pablo. You'll get there. You've seen me take a few hits this morning just because it's not acting. I want the precision, and the wicks are doing it. And I don't know why it took my trade off. I had like 4 handles on this thing. There are 4 lots on this, and my stop loss was up here, and it for some reason closed me out. I'm still looking for this low here, so I'm not trading it again. I'm just going to wait to see if it actually gets to my objective. This is really choppy though. So Pablo, if you really want to get good at this, don't trade this, because all you're going to do is reinforce the addiction of hitting this button and expecting price to act the way you want it to act, and that is not. That is high resistance crap, and you don't want to be playing in that. You got to recognize it and recognize when not to trade this, when to stay out of it. See how it's not acting the way we want it to act? It came down, it hit the rejection block right on the money there, and then turn around. And now we're got these relative equal highs above us. We broke. See, there's a little reversal here. You come back into it. Wait for that candle to the left to get taken. This little swing breaks above it. You come back into it. Takes the high. And now it reaches right up into rejection block here. And again, are you disciplined to pay yourself a rejection block, or are you working for the equal highs? If you are, you might have to wait for another retracement back into here first before it gets that high. But if you did pay yourself a rejection block, you see why they're so block-like array to like array. Rejection to rejection. Or this way, rejection to rejection. Like to like array inside a small consolidation. This one, lower one didn't get used. Now it is. Now you want to see this pump back up through here, hit this level right here at 586 to 587. See if we can get back up into there. If not, if we trade below here, look for a range extension, and it just traded below there. Retap it and I'll come lower. Look for range extension here now. There's the extension, past that one, and now this one. That was the entry right there. See how it just chops back and forth? It still gives you some entries, but if you're chasing those, you better have super disciplined rules for rejection blocks. So now you want to see this get retested here. And it's just shy of it, retesting the low there. That low's now taken. Still looking for my 493. Change in direction. So watch this, and inside that range. So you want to see it's got to break out of here to go higher. So we've got to clear this consolidation out now and find support at that to go higher. Or you want to see the first, how are we going to trade through this little box right here? So what I'm looking for is this right there. First candle to the left is right here, but you notice it's not a swing point. So you got to wait for this get taken through and then reach for this one is buried inside here. So you want to get above this swing point and use this big candle right here as support. It's not, this did not get broken with the body, so we have continuation on the downside. Now if you look at for a new price leg lower, that puts us right back in here where the breaker is. I got 4 basic models, Pablo, that I like to use. And the 4 models, that kind of overlapped one another. So when one fails, it just tells you you're on the opposite, you're on the wrong side of the trade. Then you can get back in for a continuation on the downside or the upside. So you just got the internal range liquidity model, the box-to-box model, the range extension model, and the range continuation model. 4 models. That's all I need. Internal range. Watch this level here. See that 602 or 605 I was calling for over here? Look at how many times 605 got hit. It's also, I think, what Hadi was calling for the midnight candle. That must to line up right with that 603, 605 level. Come on, rip it back. Pablo, you just got to get really good at reading where price is and what candles. You have to watch each one of the candles, how it's acting off of each candle. And then say, look at the 3 levels inside the candle. You have the low, the open, the mean threshold. You have the high, the close, the mean threshold. And then the wicks. If they are become important, then the wicks are your, see how this wick right here, its mean threshold holds. Then you look for these inversions and fair value gaps, BISIs, SIBIs, price imbalances, all those kind of things. You want to look for, see if they hold price. And then if they fail, do we use these as support to go lower? That's just back and forth constantly. I look for whatever small little range I'm in. I look for the discounts and the premiums inside that for a box-to-box trade. Trading internal range of liquidity is a great way to make your money. So if you're looking for a run to 50%, you'll see Hadi make this trade a lot of times. As soon as he gets to 50%, he takes a huge chunk off, half of his trade off, moves his stop loss to break even, keeps it tight, 62, starts scaling out. It's a great method using the fib tool to scale out your winnings and protect your money real quick. Well, I do appreciate you guys turning up. That's for sure. I do appreciate your, you got lots of people to choose from on the internet that are now trading. So we're on a 15-second chart. We're trading 15 seconds. I don't know how many other people are on the internet now trading 15-second charts, but the 15-second chart is merely a quicker example of what you're looking for on a 1 minute, 1 hour, 1 day, whatever your time frame is you prefer to be on, whatever your type of trader you are, whether you're a short-term trader, a long-term trader, intraday scalper, whatever. What you're seeing on a 15-second chart is exactly what we look for on all other time frames, all other asset classes, any stocks, bonds, you name it. If it produces candles, this is what we're looking for. So this level of precision, if this was a clean price action and you catch this on a seasonal tendency on a daily chart in a stock that is now taking a swing low and it's taking out the lows, and you see that change in direction and you see it engage that, and you're expecting another run up into May, look at the range you're in and start targeting the upside objective. So You put your buy in your stock, and then you aim for a couple of weeks, 3 weeks later, 4 weeks, or a month later, hit that premium level, pay yourself. Moves yourself to the sidelines and wait for that to get broken to the upside, come back, find support at it, and then look for range continuation or extension continuation, so that you buy the stock again and go long. It sounds so simple, doesn't it? I can show you how well it works. Right here. That's where I got in back in May. So change in direction right here. See how we traded above it? You come back inside it. You can get long right there at 507 and go long. You're aiming for up here. See how it gaps up and you go, ooh, I'm above that. Great. If I use this now, when I open here, if it comes back and tags that high, like we've just been doing on a 15-second chart, and we hit it, we're going to go long now. Now you go long. And this stock paid 20% dividends, given I got out over here in August. But that's a nice little run, right? It pays 20% and you make 20% on the run. You're doing okay in that stock. So you just move to the sidelines now. You wait till next year. You can put your money in cash and sit on the sidelines and wait. You've made your money for the year, you just wait on the sidelines. So that's why we're sitting in a 15-second chart, and you're bashing back and forth, and you're studying these charts over and over and over. You got to, like Michael says, man, the only way you're going to get good at this is if you stay in the charts and you get into the dirt and you muck around in the horse, with the horse in the dirt, getting thrown off and get reset, jump back on the horse and just keep studying it. It's the only way you're going to get better at it. If you ignore this and you just say, I'm not interested in this, you'll see Hadi, he'll sit inside here and he'll still study this stuff, because he's still looking at how price is acting on multiple different time frames. He's from a 15 seconds to 1 hour, 15 minute, 5 minute. He loves the 5 and 15 minute charts. This is another good example I want to show you here. Again, I gave you this example this morning. You see how we've got this change in direction? So we've got this high is taken out. We've got this change in direction right here. This candle rips all the way through 1. It rips through 2. And then it rips through a third level down here. This low, this breaker gets eaten right through. So when it takes out the third one, you want to look for a retest of the last one, which is there or even here. There's a retest of that inversion. Now we want to see it come back, find support at that. You don't want to see it break through that and then go lower. Take out the low. Takes out the low. You pay yourself there. And now you're waiting for this low to get taken out. So when you get a big bold candle and it goes through 1, 2, 3, always go for the last one. Not this one way back up here, the last one. If I pull my fib tool on the mean threshold of this candle, all these candles, you see how they're all stacked up? Michael talks about how you use all this breaker here, not just the last one. I like the last one, but if you use all of them together, watch the body. There's 50%. Look where it comes back to. Right on 50%. You see that? Right there? And then snap. It comes away from it. So that's the line in the sand you want to see it trace back into, or our my safety thing is right here. But the mean threshold is your line in the sand. So when you're coming back into that level, you want to put your stop loss just above the high of it, because you know if that gets traded through on a close, then chances are we're going to come back and revisit these two that we never got in the past. Do you understand that? See how precise that is? That's not some random haphazard moment. That's precision. And I use the bodies, not the wicks, by the way. Anyway, I hope that makes a point for you guys. I hope you see the logic of that. So now we've got this level taken. I want to see that hold price now, and I want to see that start going higher. Here's our little change in direction. We've got a low, change in direction. The candle to the left of it, which is this big one hid inside here, I want to see no more than that mean threshold right there get taken. If it starts to go close below that, forget that noise. We've got the high taken, and now we've got this. And again, you're back into consolidated crappy markets. So if this was really aggressively going to take off on you, you'd want to see that mean threshold hold price. And you see how it didn't close below it? Forget it. We're running lower again. So that mean threshold's an important level for me. See how you see this? You want to see that act like a breakaway gap, right? You notice how it just, you want to see this institutional order flow entry drill. You think that's sweet. Now I want to see it leave. And then it starts to come back again. You go, oh, that's not what I want to see. No. And it starts to fill it all in. Now you close below it. You go, oh, I'm on the wrong side of this. Now it's going to go lower. Now I want to see it can come all the way back up into this level here. I guess close enough for government work. That's pretty close. And now you want to see it take this low out. I appreciate really what you're sharing. You're welcome, Melody. There's the low taken now. Just keep staying on the horse, you guys. When everybody else is quitting, anybody else is moving to the sidelines and they don't want to study this anymore, or they give up, then and you keep staying here, plugging away at it, keep looking for those key levels, then you're the other one who's going to benefit in the long run. You got to stay in this kind of, you got to appreciate this crap for when you get clean price action. You just go, oh man, that just left with you on board, and you're like, wow, that was quick, that was easy, hit perfectly off of my spot. And when you're in this mess and you go, oh man, I'm getting beat up in here, keep hunting those specific data points. And if they're still kind of holding despite all that noise, and you're still trying to pull a data point out of that, not a trade, but pulling a data point out of that, and it's hitting it nicely, like we just called for that to take the low, it did great. That's the low. Now you say to yourself, I got to be disciplined to pay myself there. As soon as that low gets taken, I got to be disciplined to pay myself, because in choppy environments like this, did you expect it to go ripping off on you and just suddenly get all clean and take off? No, it's going to be all chop. So back inside this range again, from here to here, 50% right there. You see that? Trades back to 50%, rolls over, and finally comes lower. But when it does retrace back into that small little range there, that's what we're expecting to see, at 50%. And there's the premium array again, because it's right up into that premium array, just nipped in there. And now we want to see it go lower. And we're consolidating. So would it surprise you if it came all the way back up into here again? There's a small little sibby here. Watch this candle get taken to the upside, then look for that level there. Bissy sibby overlap. We could get a little retest right here, come down and give it a little kiss. If it doesn't and takes that level, I'll watch that candle, kind of like what we were talking about with this one. If this one takes off here, then look for the last one, not this one. If it doesn't clear that, then look for this back here. Just a wick. Back into the premium. Still no discount box has been hit yet. So watch the premium box. 580. And then if it's, now you're well up into that premium box inside that range. So now you're up into that in optimum trade entry reversal area. This area has not been tagged yet. So if this reverses, where's the target? Down here. There's the little premium. And watch it go. Inside that small range now, where are you? 50%? Come on, give it a little kiss. Bing, done. See? Premium, discount. Now we want to see if it gets through there. Comes back, find some support at this. Before it takes that low out, you want to see it close below here and find some support here. If it, see how it just wicked to there? Didn't close below. So now look for this little sucker right here. If we close below it now, come back, look for this to provide some support and look for range extension. We'll look for that candle and then that wick and that wick. So there you go, below it. See now we've ripped back through it again? Not what you want to see. Wait for it to close. Wicks do the damage. There you go. Body's respecting it. That one there literally opened right in it. Ripped down. Still haven't taken this low yet, you know. Now we're closed above it. Closed below it. Closed above it. Retest. Look for this guy here now. Oh yeah, there's no A plus set up in here yet, Hadi. I don't see any A plus anywhere here. This is such a messy environment to play in right now. So we're already through that level. See how we've closed above it right there? Literally above it, and then boop, you tap down. Now we're looking for range extension, and we're looking for this little guy right here. Right there, boom, done. Now I'm looking for mean threshold of this candle. If we can close above that, look for mean threshold right here, 585. It says no, the bodies are still inside here. Wicks are above, change in direction, change in direction. Watch these two here now. We want to see it close below them, or we want to see it pump up into this mean threshold here. Now we're above it again. Good. Now we just tapped it. See that? Quick right there. Here, you tap it. Now range extension. I'm expecting to see this high get taken now. We're through the mean threshold. So again, you want it clean. Tap, go. Big ass wick like this. You don't want to see this give way. See that little tiny imbalance? This has been validated. So mean threshold imbalance rolling back into this range. I'm looking for this level and this level here now. See how we got that run higher? Imbalance, trade through it, back into it, looking for 1, 2, 3 levels. So that there's your first discount, second discount. And if you pull your fib tool on the whole thing, you'll see that that's more than 50%. 62% retracement back inside that range. If you're looking at that one, just shy of 62. If you're looking at the larger range, which I don't take all of those yet, you're still hitting more than 50%. We've traded below this candle to the left of it, right? Remember this one, when we look for the candle to the left of it, right? The same with this one here. As soon as you see this, look for the first down close candle below it, retest it, and then go lower. That's an internal range liquidity hunt. And if it pops back through this and takes that out right there, we're looking for range extension again. But right now I'm looking for this to hold price to come lower, and I'm aiming for the rest of this down here. Not that I'm actually taking the trade. Your SMT, you're in long, risk-free, out, long again. You're still, how you can trade that, Hadi? Man, you got to be swift with your stop loss, my friend. Yeah. There's the retest of that level there. Now, shoot on up. Take out this chunk out here. Watch this level here. See, we still trying to make heads or tails out of this mess. We still can. Wicks are doing some damage, throwing us off a little bit. Sometimes we trade through our levels. It's not clean price action, but trust me, when you see clean price action, you're going to be like, oh man, this is just sweet. Oh, absolutely I do. Absolutely. I'll cut all the way through these candles here and I'll say, what range am I in? What's my next level? Why am I aiming for that? Why am I aiming for these little imbalances here? I look for them all inside the ranges that you're playing inside. The moment I do a range extension, I'm hunting for the next objective on the next highest range. That's what I'm hunting for. So we've hit this objective we were looking for here. We said send it higher, and there, send it higher. Now looking for these two to get taken out, and I'm looking for this imbalance right here at 594 to 592, and it just hit 592. So it's just hit the edge of this one right here. See that right there? That's the one I'm looking for. Precision. And now it's pulling back into this range. What do we got inside this range? This little guy right here. I'm looking for 577. And if we close below this, I'm looking at this candle's wick to find support to run down here. We're above the mean threshold of this candle. Oh, I forgot about this guy here. I was like, why isn't it coming down there? So we traded above that back into this. So now you don't want to see this close below 581. If it gets below 581, then I'm looking for this. My bad. I forgot about this guy here. I was wondering why it wasn't coming down there. It's because it's bouncing off of that for range extension, right? There's your range extension above here. Now you want to see a body break above here, which it did. Now you want to see a continuation. So watch, when I take these two candles and I go like this, this is where you want to see a precise 50% of that range. There's 50% right there of those two candles. Range extension again, pay yourself. Now you're below that 50% of this guy here and here. Now we're looking for a run down to this dude. Small low been taken right there. Watch this guy right here. I still think it's coming back here. It's a little swing point. Traded into it. Mean threshold is hit right there. There you go. Done. Okay. It is definitely rubbish price action, Russell. This is not put your money on the line type of environment. Because if you win this, if you actually call this and you win it, you just convince yourself that you're invincible. You convince yourself that you can trade anything, man, and that you're really good. And then all of a sudden it just goes ripping against you, and it just builds the wrong kind of trading mentality, I think. You start get overconfident where you think a price is going to go. Like you see me many times say, well, oh, okay, that's changing on the direction. Oh, no, it's changing again. It's like I'm changing my mind, but I'm literally trying to stay on the horse here, and it's bouncing above a level, and I go, now it's going high. Oh, now it's going low. Not just because I saw the down candle, because it broke a specific point. And then I got to look inside that range. So anyway, you get my idea. When you're in consolidations, you're going to be changing your mind up. No, it's going long. No, it's going short. All because of key levels that give way on the downside, the upside, the downside, the upside. That's consolidation. Look at that. See that ripper? If you had a stop, you were going along there, and that just traded through you. You're like, oh, I'll put my stop loss down here. Rip. It just took you out. Not clean at all. So there's the little change in market structure right there. Body trades below it. Opens right here. Boop. And literally taps it right there and takes off. If you were quick enough to catch this open below that low and came back and tagged it right there for the continuation, good for you. But you got to be like on the game. So anyway, I want to get my freaking number here. This 493. Give me my 493. So I can do a mic drop. It'd be no trade Thursday. So this is retesting these lows. I don't mind that. Right there. I want to see 554 to 555. There's 554, 556. 555's right there. Wait for the close. Wait for the close. 556. You're above it. And you're above this one. So now this is a reversal situation. We've got a trade above. I'm expecting to see this go higher now. So how much retracement back into this box here? When you get big boxes like this, you're like, oh, where do I put my entry? 1, 2. Because if you're wrong and it trades through that, you can trade back into it and break your trade at break even. That's like level 1 right there. And level 2 entries right here. As soon as it takes that, pay yourself. Move to break even, you're done. So you have a risk-free trade right there. So that was level 1, level 2. Here you go. See how we saw the change in direction? We talked about this just before it happened. It hit it, so that's where your entry would be. And now you start to scale out your trade. There's your premium box. Pay yourself there. Move your stop loss into profit. You've paid yourself once. You've paid yourself twice. And now, and you're up in this premium portion of this range right here. And now you just see if she rides all the way up. Goes from higher here now. Yeah, the options chain this morning and all week, for that matter, has been showing very constricted movements in an overall holding pattern that is susceptible to shock drops or dumps. I agree, Peter. Yeah, it's Christmas time. That's why Michael's enjoying Christmas and not stressing over charts. I think this is just a great time to start practicing your setups, practicing your price analysis, not setups, just your price analysis. But you can see how we called this one right as it was happening, called that level right there. You would have paid yourself there. This would be a risk-free trade for you right now. You would have paid yourself at a premium array. Next one is sitting in here, right there. That's another immediate rebalance, traded above it, tap it. Now I want to see that keep going higher. I want to see that range extension now. There's rejection block. Pay yourself at rejection blocks. Nope. Wait for this little candle here to get taken for the downside. Otherwise, I still want to see that go up higher. Yes, validate that. Now you use this candle as support. I don't want to see more than its mean threshold get taken now. Come on, there you go. Range extension. There's done. There's your range extension. Completed. Did you pay yourself there? We gave you the entry here and an exit there. We gave you multiple scale out points. So now if it breaks through here, we have a slight little market structure shift. And now I'm looking for another run back, internal range liquidity hunt. Remember we talked about this candle? This candle? We trade above it right there. And look at the mean threshold. See how we traded right back into it with precision? That's not just some random data point, my friends. I've told you guys about these things. First candle to the left. First candle to the left after the SIBI. Look for that body to break it, come back. We do not want to see more than its mean threshold get taken. Nice tap, go, range extension, pay yourself. Because you're paying for a premium, super premium, and hoping you get more of a premium above you. So if you paid yourself at rejection blocks, move to break even, you've got a stress-free trade on again. And you're looking for higher prices. And the way this is moving right now, it wouldn't surprise me if you just rolled over, took this out here, and look for that candle to support price to go lower. We give you several stress-free trades here now. Whenever you have time, I want to show you the one trade I took yesterday. Pablo, you're in the channel there, right? You're in the trading view, or sorry, the top. What the hell? My channel there, the ThetaWave Trader. You're in that. If you are, you can just DM me and show me your trade. And if you're okay to show everybody the trade, then you can just show them on the channel on Telegram there. And I'd like to see it. I'd like to see your setup. I'm always happy to see your trades, see how you guys set up your runs. See, there's the low taken there. No body's taken the low yet, so we're still bullish until we get a body breakthrough here, not just a wick. That's just a little liquidity run there. Slight little imbalance. Keep your eyes on this. And then we look for the candle to the left right here. We're going to get a body trade above here, not just a wick. Get a body above that. And use this candle as support to go higher. Or you could say, you know what, it's buried. Hey, there you go. How beautiful is that? So again, don't put money on this. It doesn't matter about putting money on this right now. Just keep practicing all the way through till Christmas, all the way through till the new year. When you see price starting to clean up a little again, you'll be looking at times like this and you'll be going, man, oh man, they're so much cleaner now. Price action is so much cleaner. When you can see the price doing what we talked about right here, when price action is clean, you guys are going to be so giggling to yourself because you'll be like, yes, I see my setup. It's clean. It took off nicely. Like this was a really nice entry, a little clean point, and that was a nice little clean run to a premium breaker. Take the breaker out, use the breaker as support to go higher. And this is a little bit more chop than I would really want, but yeah, no need to put money on the line. Just practice, man. Practice, practice, practice. That's where, when the money comes, the money will come when you guys get really good at reading every candle. And we're in a 15-second chart, my friends. Live on a 15-second chart. Well, if you're not joined, for sure, pop into the channel. There's super great people in there. They're happy to help you out any way they can. You show them your chart, ask for feedback, and they'll give you their feedback. And remember, you don't take anything personally. Just listen to the feedback and put the ego on the side and just enjoy the feedback, man. Some people have got some different ways of looking at things. We get people in there that actually use some ICT principles, but are very much retail traders. And the channel is based entirely on ICT stuff, but we got people in there that trade really well and trade retail ideas and make it work. This is all choppy again. Now remember, after 11 o'clock, I'm not interested in playing after 11. Usually you'll see HIDSIGHT shut down then too. The lion's share of the trade day usually occurs in that opening to 11, 12 o'clock range. There we go. Still got higher, running higher. Look at this. See this candle? Bodies trade above it. We're inside this breaker. Bodies are respecting it. Wicks do a bit of damage. Come back up, finally break the high again, and look at it. Look at how solid that is. Right there. Right on. Look at that. Right on the close. Look at how sensitive that level is. Can you feel that? Did not get my lows. So close. We didn't get our lows. HIDSIGHT wanted 501. We didn't get our 501 either on HIDSIGHT. But we got the reverse. We got the change in direction. So you can see, I just want you guys to see this. So when we gave you the reversal here, and I gave you that spot right there for the continuation, we're hunting internal range liquidity, right? So if you're using the method, I'm sure my favorite method, especially for those of you who are just starting out, if this is my entry and I'm in a discount portion of this range, and my entry is right here, and we gave that to you, as soon as it hits 50% or takes out this high, you pay yourself, take half your trade off, take your stop loss, which is sitting down here, and you're moving it up to break even plus the cost of the trade. You take another 10% out here, another 10% out here, another 10% out here, another 10% out at 78 or 88%, and then you wait for market structure to break to the upside, and then you're using this breaker as support to go higher. So then you just say, is this going to continue? If it does, I'm looking for my range continuation model. So my range continuation model continues and works beautifully, like ting, 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 multiple times. It's tagged on there saying, I'm giving you an opportunity to get in on the bus, loading up the bus, and then away it goes. So internal range liquidity model, box. Unfortunately, there's no box up here I can see except right here. This is an immediate rebalance right here. You see it come back immediately rebalance right there. So you can use that, or you can use this little tiny imbalance right here. As soon as you see that hit it, come back, it tags it. And I want to stretch this out so you don't think I'm just form fitting this stuff. Right? Watch right there. I'm just boxing that one in. And see how you traded above it right here? Come back, find support at it, continue going higher. Look at that, how many times it comes back into it. Little wick does some little damage, but no bodies get through there. Range extension model. As soon as it breaks that high, great. Now we use this candle as support multiple times, and away you go. So if you're internal, you use that. Model 1 is the reversal model. Model 2, internal range liquidity hunt, box to box if you want. Wait for that premium box to get taken. Use it as support to do a range extension model. There's your range extension right there. Now you're looking for a continuation model. We want to see a body break that high. It does. Then you want to see that high to this last breaker candle get supported and then go higher. That's the range continuation model. So there's the 3 models all inside there, and you can pay yourself internally, wait for the new model, pay yourself again for extension, wait for the continuation model. It happens, get yourself in again, and you can continue going higher. Does that make sense? So you've got all 4 models that you can use right in here, right on that entry. And when it's clean, oh man, you guys are going to see some sweet deals. When price action is clean. Price will move away from SIBI, BISI inversion. I'm not quite sure what your ones you're referring to there, but see how this is a bit sloppy here? See that level right there? We traded through it. We came back into it. Look for this high to get taken. It does. You pay yourself. You always pay yourself at the next high, because sometimes it just goes wicks above it and then comes ripping all the way back through you. So pay yourself, move to break even, and if it comes back against you, then you say, here's my line in the sand. If it trades through that on a close, which it does right here, you go, now I'm looking for a rejection block, an old low. It hits the rejection block and then quickly pumps back up. So you wait for this level to get taken. It does. Come back, find support, get back in sync with the market and go higher. You can get back in sync with the market quite easily. Even if you got out down here and you said, okay, I'm out. I'll get back in if we see this high taken. Good. Comes back in. Now I'm going to see that run higher. And as soon as you see this forming, you go, ooh, that's a change in direction. Body trades below it, trades back into it, close your trade off. Now we're going short. So all the way up to here. So this is a short from here. So I'm looking for a retracement here. Look at that right there. Bing. Here's the short. Boom. Pay yourself right there. The mean threshold. There's no SIBI here, notice? So you have to use the last down close candles. High, it's open, or it's closed, open, and it's mean threshold. Those are the 3 levels. If you don't have a SIBI, you've got to use the last down close candle. So there's your entry. Pay yourself, pay yourself, pay yourself. Again, it's a small little range. Maybe you don't want to engage in that kind of thing, but if that mean threshold holds price and we start to run back up, I want to see it if it breaks through here. If not, I want to see a market structure shift below here and use this candle as support to go lower. See this one here? Break below it, come back into it, go lower. Rejection block. Ooh, didn't hit rejection block yet. Give it time. Give it time. Oh, come on. Give me my rejection block. There we go. There's the rejection block. Done. All right, so now we can shoot back up there again and just piss you off because you didn't get your low, but you should pay yourself at the rejection block. Frustrating, eh? That's why we pay ourselves here. Look at that sucker. Are you getting something from this? If you are, give me the thumbs up. Give me the like. I do appreciate it. And subscribe to our channel if you're new. We try to give you the precision. This is, again, a 15-second chart. Not many people are trading on a 15-second chart or even demonstrating on a 15-second chart. So look at that. Right into that box we're calling for. Rejection, boom, right to here. So now I want to see, do we see how D, if you're still watching, if you're still here, premium box, look at that, right into that consequent encroachment, and I want to see it run all the way back down into this little fella here. There's one right here. If it pumps through it, again, look for a range extension model and then a continuation model. Look at that, right to the top of it. Smash mouth monkey. Look at that. Boom. You can't ask for more laser precision. I'm looking for this little fella right here. Right there. See, I hit it? Look at that, right on the money. Right on the crosshairs, baby. Box, box. Now eat through this little sucker. And let's get a market structure shift. Otherwise, they're just internal range liquidity. Price will move in and out long. It's the Venom model I've been seeing very much. The Venom model. Yeah. I don't know Michael's Venom model that well. So we've traded through it. We want to wait for a body to get through here, though. There's the rejection block again. Wait for the lows to get taken now. There's the low taken. Pay yourself. See how we traded back through this one here? Closed, came back, tapped it, went lower, closed the low. Now you want to see it tap, hit this level. Look at that. Literally opened, tapped it, and left. Right there. Quick, bing, done, down. And down we go, down we go. Are we going to get my 495? Come on, Nadia, we want our 495 now. Let's see if we get back into this level here. Let's put our box over here and see if we get into this little. So we want to see this consolidation get broken to the downside, come back, find some support inside here, preferably right here. At 587-ish. That's it. Give us an institutional half away. Don't go any higher. Don't fill it. Don't fill it. Come down. The lows have been swept. Watch this level here. And then internal range liquidity, box to box. Otherwise, if it doesn't close above here, then there's our consequent encroachment right there. Wick did a little bit of damage, didn't fill it in though. Ding, ding, it's macro time. Look at this next price leg down. She's coming down, folks. She's driving on down. Do you have a breakdown of each model so I can find it? Nope. I don't think I do. I should make a video of all the rules for each model. But I talk about them every single day. That's all the models that I've been teaching for the last year or so, 2 years. So stick around. I go over them every single day with you. And the best way to learn it is to see it. As I'm explaining it, as it's forming, you'll get to see it and you'll hear the rules and you just kind of write them down as we go. That way you kind of learn it on the fly. Nice retest. We want to see that consolidation get used now as support to go lower. Now I want to see this one get busted. And we're targeting this little fella down here now. So we're internal range liquidity hunting here now. And when you got all this consolidation, it's better if they got nice bold candles going straight up so we can rip through all of them. When you got this little congestion, you want to see accelerate through here quickly. Blow through it really quickly. That's it. Accelerate to the downside. Remind me tomorrow, and I'll start doing that. I'll start doing the models. I think if you type in my at the top of the channel here in the search box, search in my channel and type in trade models, you'll see various videos pop up where I've explained one model or another, and I've explained the take profit models as well, and there's 5 of them. I think the boys in Toronto got the 5th one. I haven't really explained the 5th one. But the guys in Toronto got that one. But there's 5 take profit models, and there's 4, and each one of them are custom made for whatever you want to. If you're like a low risk, you just want to save your money as quick as you can, protect your money. Take profit model 1 works for you. Your entry models, you got 4 different entry models, internal range liquidity model, all that stuff. Type it in the search bar and you'll find, I've tried to mark them at the top there in the title bar, the specific models that I was talking about that day. So you can see those. See how it's nice accelerated through here now? That's clean. It's starting to clean up now. It's starting to move in the direction you want it to go. It's bouncing off of clean arrays. I like it. So again, when you see this kind of thing, what are you seeing here? Your eye should instantly go to, if I don't get this, I'm okay with that. I'm going to be looking for this SIBI to get broken to the upside and the bull trap to get closed. If I want to go long, I want to see this get broken to the upside to start hunting for this area here. Or at least this retest, because we never got a retest of that. We're close. We never got a retest of it. So no body above here yet. So we'll just come back up, fill the fair value gap, and we're going lower. So this is just a fair value gap. It's not inversion yet. So we've just claimed the fair value gap. Now I want to see it pop below the fair value gap and just use it as a tapper to go lower. And we still got no body that's broken that little imbalance as well. And wait for the bear trap, the bull trap to get closed above. Not just a wick. You got to get a body up there. So now we're above it. We've come back in. We've just tapped the edge of it right there. And we're just looking for a run into rejection and take out that high. See that? I'm going to mark this out so you can see it. And you'll see how precise that level was. Right there. Look at it. See how that, look at this close. The open on this candle or close on this candle was 82.25. The low on that candle is 82.50. So you're like 0.25 short of tapping that SIBI. So we could see that tap it now. I want to see this candle hold price now. See how we traded above it? You come back in, you want to tap it and leave. See these two candles? I don't want to see that. I want to see that leave. Just give that a little kiss and go. So now you're looking at your line in the sand is the mean threshold. You don't want to see that mean threshold get taken, which is pretty much right on the top of this candle, this SIBI. Hit it and start going higher. It's not till it breaks back through this level that you want to see it target this. So I'm not looking at this right now until I close below 572. Stay on the horse, my friends. So Melody and Pablo, if I were to say to you, what is the reversal model? You've seen the reversal model so many times this morning. Can you write it out? See how we've come all the way back into this SIBI now? This is where it starts to fail. So the mean threshold, you trade through it, you go, I'm on the wrong side of this. This is coming back down inside here. It's going to run deeper into this range. And then if it closes below there, I'm on the wrong side still, and it's going to keep coming lower. So this is just a big retracement. You wanted to see this bull trap get broken. It did. Now you want to see it provide support because it's a little breaker here, right? That takes out this little low and sends it lower. Takes out this little low over here. So that breaker, you want to see it hold price to go higher. And it didn't. It failed. So when its mean threshold gets broken, you're looking for this SIBI to get hit. Because remember, we didn't get it tapped here. And I always tell you, if that fails, the area that didn't get tapped is going to get revisited. And it has right here. So now you want to see, do we break through here? Come back, find support at that, and now start targeting this little fella over here again. Look at how those levels are precise, hey? See how the bodies are respecting that? They're crazy accurate, I tell you. This one I know. Low is taken. Watch the first bullish candle on the left. Look for the close above, which is the breaker. Hope this makes sense. No, that is not the reversal model, but it is an internal range liquidity hunt model. It's not the reversal model though, Melody. You're close. You're close. So the reversal model is this. As soon as you see a low taken, write this down. It's your rule. If a low is taken, and we use time and price, we'll talk about time later, but typically if you see because time is a crucial factor, but if you see a low taken and a macro, especially at a macro time, add this as well, low macro time at 10:50, we see a SIBI forming at a macro after it takes a low, and we see the SIBI is broken to the upside, and we use it as support. That now runs me back in internal range liquidity, wherever that range might be. Look to the candle to the left. Once we break through that, find support at it, now we have an internal range liquidity hunt. If it's inside, if there's a larger range, we're going to hunt that internal range liquidity until I reach the next high, or I'm going to hunt for the next premium array. Okay, so the reversal is simply a SIBI that forms after a low has been taken, and to really add precision to it, look for a macro time for a SIBI to occur after taking a low. Wait for the body to break the high of that SIBI, tag it, and then start running for the next high or the next premium array. If the candle to the left is broken on the upside, and that's a continuation for the next rate range run. Okay, so this is just simply the reversal. Low taken, look for a SIBI, wait for the SIBI to close above, then tag it for a run higher. And then look for the range that you're in and look for 50, 62%. Use take profit model 1 to take your money out in that range. Unfortunately, this guy was so close to that one. You want to see it break. Use that as support to go higher. If you lose the mean threshold, you're on the wrong side of it. Close it out. We're coming back into this downside target again. We did look at waffle. It finally traded below it. Now it trades back into it. Now I want it to go short. Now I'm using this as a range extension model. Once I trade back through it on a close, I use it as I can run back all the way back up inside it to go lower. You see that? See how we've now busted that low? Pay yourself at that low. And we're still looking for our little box down here. You get that melody? Did that make sense? That's the change in direction. And then it fails once we break the downside of it right here. Then we use it as support to go lower. So it's another model, which is the range extension model. The range extension model is the fail safe if the internal range liquidity hunt fails. In other words, that mean threshold gives way. We're hunting for this. If that fails, then I know I'm going to use this to get back in sync with the market to go lower. They switch back. They switch back and forth. One supports the other. So when it fails, you could instantly jump into the next model to run lower or run higher. Depends on the... Does that make sense? I got it, I think. Thanks. Yes, good. Excellent. There we go. Done and dusted. Box to box, my friends. Box to box. That's an internal range liquidity hunt. If you hit that sucker right there, precision, enter 1, 2, and 3, those 3 levels of entry, your stop loss sitting right there. Look at that tiny little stop loss. And then we start to run down. We break market structure. We take out the BISI. We trade back into it. Beautifully there. Continue. Take out the next low. We trade back into, we don't want to see this bullish candle get taken to the upside. Bullish candles, I don't want to see those taken to the upside. This one did. So if you went long and it traded back through it, you go, I'm on the wrong side of this. It revisits this. Close your trade off and wait for that to break through it. It does. Good. Now you can load 1, 2, 3 for a short. Takes that out. Pay yourself. Move to break even. Aim for that target and you're done. So you see how you can save your ass, you can save your trade just by sticking with the fail safe. Add that to your repertoire of notes. The fail safe is critical. It is not an ICT term. It is one I've added, and I thoroughly believe in the fail safe. If you do not have a fail safe, you got a stop loss that protects you against a dramatic stop, a dramatic turn against you, right? And then the fail-safe is those data points that you don't want to see it get above that point. If it does, you're on the wrong side of it. It's coming back against you. It's going to get your stop loss. So the fail-safe protects your stop loss against dramatic hit. Okay, so here, now we're tagging this. Watch this mean this consequent encroachment here. This is delicious. Look at this. Oh, come on, give me that little tap. Look at that right on the bottom. Scale out, scale out, scale out. Box to box, like to like array, man. Look at that. Precision to precision. That's a mic drop moment. Okay, show's over. Bye-bye. Just kidding. Now you're looking for a range extension model right here. See that? We've traded through it. Come back, tag it. This whole area now is fair game to go lower. Tag. Entry 1, entry 2, entry 3. Stop loss goes here. Why there? Because that's the fail. That's the candle to the left of the last fair value gap. So that becomes the bull trap. If I get above that, now I've got a market structure shift, and now I'm going higher. Do you see? Do you see, my friends? Do you see? That's a 15-second chart. 15-second chart. No different than any other chart. You see that? You just got your first entry short. That was the range. That's the continuation or the range extension model right there. I gave it to you just before it happened. That's the range extension model. Entry 1, entry 2, entry 3. So you got one on there. As soon as it takes that lit guy out right there, pay yourself, move to break even, hits the next objective, pay yourself for the next objective. And we're aiming for this breaker down here now. Because you see this forming here, and you see the candle to the left. Are you starting to see it over and over again now, Melody? Do you start to see the rinse and repeat model? If we see a lows taken, and I see this starting to form, if I get back above that and this candle to the left finds support, I'm coming back inside that range. Pay yourself. Pay yourself. Give free will a chance. See how this is. What do you want to play in? This kind of shit? Recognize this as high resistance crap. Then it starts to clean up a little bit. Still goes a little bit of resistance, but then suddenly it starts to clean up, hit some key levels. And you see how it's kind of, it's still a little bit choppy there, but it still hits key levels and accelerates away. That's staying on the horse. That's staying on the horse, my friends. If you get a chance, could you revisit silver? Would you consider that 1 hour held support? 501. There's 505, Hadi. Just give me my 494. I want Hadi to get his 501. His blue jeans. Remember the 501 blue jeans? How many of you guys remember 501s? Do you remember 501s? So here's the range. Here's the tricky part of this now. We've got this change in direction, and we have this bull trap. And see how we're closing above it? But pull your fib tool in here. This is the tricky part of these ones, because now you got to go. I'm at 62%. Nailed 62%. I did not close above this level. And I'm coming back and tagging this. So now if I accelerate through this again, I'm coming back into that range. Right? So where do you put your stop loss? It's tricky because now you got a reversal. You've got a change in direction. But now we're right in that little candle to the left. We want to see a body get above it and then use it as support to continue to push into this range, aiming for this next candle. Because you notice there's no BISI inside here to bounce off of. So you've got to use your 50%, 62% as your take profit model 1. So if you entered in here and that just hit 50%, move your stop loss to break even and pay yourself. Because if it comes back and takes you out, at least you got half your trade off and you got the rest of it's break even. And you're sitting right here. Look at how close that is. And you're still in. Anyway, you're not taking a trade here. We're just practicing, remember? We're just practicing. If you feel the urge to make money, you got to make money at this. Got to make money. Practice, practice, practice. The money will come. Oh, sorry. Let's get back to silver here. Let's have a look. Oh, my goodness. Look at that. So I want you to see this. Look at this gap. We just went kaboom and dropped down. We were looking for this to go higher, right? Look at that. That was we did not get a body trade above that to go higher, right? So we're waiting. We waited for this, and then all of a sudden it just went snap all the way down here. And notice where it closed. This is your range extension model. When the discount box, premium box, discount, premium, I'll put that in here so you see it. This is the premium box. This is my box to box theory. And this is your discount box. This is my box to box thing. The continuation model happens when you break the premium or discount. So we're internal range liquidity inside this little range here, right? When we close below the discount or close above the premium, I'm looking for a range extension. That could be simply a wick above here, whatever. I'm looking for a range extension. And if I get a body above there, I switch over to my next model, which is my continuation model, range continuation model. So I'm expecting that to go higher. And then I'm looking for specific characteristics, which you'll learn about a range continuation model. Notice it did not give me my range continuation. All it did was bounce, stay right in that premium array. And I go, now I want to see if it runs past my discount array. So I'd like to have seen it go trade through here, tap it, internal range liquidity hunt, box to box, and it run down into here. It didn't. It literally gapped down below that level. And then look what it did. It went boop, came back and tagged it for the range extension model. That's exactly what the range extension model is. You trade below it or open below it, trade back to it, and then go short. That's it right there to a T. Open, bang, hit it, range extension right there. Now we've closed below this level. I'm looking for a range continuation model now. So now I'm looking for this to run deeper into this range. So I want to see this candle provide support. So all up inside that wick. Ideally, I want to see that wick get tagged, half the wick, and tag the low. All the way back up into here. So your stop loss has to sit right above here. So that's quite a long ways. So you adjust your leverage accordingly. If you're putting 1% of your trade on, how many micros? So that might be 1 micro with a stop loss way up there. And the moment it takes that low again, move your stop loss to break even, pay yourself down there, and then start aiming for the next objectives. Does that make sense? You're welcome, LDC, tomorrow. Did that help you, Vital? That makes sense? You're welcome. So here's a way to protect yourself on that one there, Vital. Once it comes back to this area, so just because I say I want to see it hit that level, as soon as it does on a 1 hour chart, I want you to go down into a 15-minute, 5-minute, and 1-minute charts and look for the reversal that shows you that it's going to continue going down in that direction. That's why we use the higher time frame objectives for time and price to hit it and then reverse off of that. So if you actually catch that point right there and you get down to a 1-minute chart, or you're crazy good like Hadi and he's on a 15-second chart like we've been playing on, and you catch that reversal right off of there, then you say, now that reversal, all the time that is being supported, I've caught the precise time where that's going to turn. On the lower time frames, it'll show itself down here. Right? And then you can get in that with a little more confidence than just saying, as soon as it touches that, I'm going to hope and pray that it doesn't go any higher. Well, go down to lower time frames and start scouting the reversal. As soon as you see the reversal at that key level, take it. Take it. And then if it reverses back on you, that's your fail safe. You're out. Does that make sense? Okay, good. Excelente. Excelente, my friend. Excelente. German. The German DAX. Oh my goodness. Could you guys see this? Did you see this? Let's do it. Let's do it. I want you to see this. Melody's gone already, so she's going to miss out on this, but it's the same thing. If we take these two candles and I go from top to bottom like that, that's the top of right there. That's those two candles. I like to use the last candle as my most important candle, but use both of them. The line in the sand is 50%. But watch what happens when I take this candle and I go boop right there. Look at the precision. I want you to see this. Do you see that? Do you feel that? Does that not like stir your loins? See you later, Hans. Love you, buddy. Much love. I'm sending the love, my friend. Do you see that last candle? Do you see how precise that level is? And then leaves. Pay yourself. Move to break even plus the cost of the trade. Pay yourself. Pay yourself. It happens over and over and over again, even in your favorite stocks. Russell is one and done. And we're back to choppy, crappy, welcome to lunch hour stuff. I think that's going to be it for me. It's been fun. I've enjoyed my time here this morning with you guys. I will be on Telegram there. If I see something good, I'll take it. I'll show you the diagram. I'll show you the picture. And Vital, by all means, share your trade with me. I would love to see what you're doing. Any ideas that you've got. I'm always eager to learn something new as well. So thank you all for tuning in. And as usual, I'm sending the love, my friends. Thank you so much for tuning in. I appreciate all of you. I appreciate all your time. And if I can help out in any way, I will. And just remember, tell your friends, no one's here to sell you anything. Pop in. You got a nice community of people that really care about you succeeding and wanting to see you get better at your trading and price action, understanding how it moves and key levels that it's reaching for. So hopefully you've learned a little bit here today. If you have, tell your friends, invite them down. I'm here to help. We got lots of guys here willing to help you, ladies here to help you too. So I will see you guys in, see, look at that. I want to show you again. Take this candle and let's stretch this out. Oh, just below 50% this time. What happens if I went to here? Take the whole two candles, 50%. Just that last candle, just over 50, 62%. It still goes higher. I love it. I love it. Anyway. Telegram link is right in the description, the bio above us here. Just click on that. And I'll see you in Telegram. Until then, look for, I think I'd like to see this run higher. Where are we at here? We did get that 605 level. That's so beautiful. See how we traded through this, back into that? Initially, I wanted to see us trade back into this and then go higher. It did. Actually ripped up there to that higher level. And then If it trades back through it, I want to see it retest it and go lower. And it did. Albeit choppy. It was there. It was there. Anyway, I will see you guys tomorrow. Thanks for tuning in. We'll see you guys tomorrow. Be safe. Take care.